Is this whole banking thing just some type of a scam? Or is the infinite banking concept merely just some type of a tax scheme? Those are great questions. So let's start with the beginning. The concept of gaining cash value and storing it in an insurance policy is a concept or a philosophy that's been around for well over 100 years. The TAMRA Act in 1988 basically made some adjustments to how much money you can actually put into it and not have to worry about paying taxes. Well, prior to this period of time, before the 80s, people could go out and buy a $5,000 or $10,000 life insurance policy and dump thousands and thousands of dollars into it. And what happened is the entire industry got together and said, we cannot compete against this. I mean, banks, credit unions, all got together and lobbied because people were going to their financial advisor who had money in the stock market and said, take all of my money out. I can put my money into an insurance vehicle where my money's safe. I don't have losses to the marketplace. It grows with guaranteed returns. It grows tax-free when I take the money out, and I can put as much money in there as possible. So basically that industry lobbied and said, hey, government, we can't compete against these products. You have to come up with a set of rules or guidelines because this is just simply not fair. We cannot compete against them. People are taking all of their money out of their checking and savings and putting them in insurance vehicles. They came out with a set of rules that told the insurance industry in the 80s, in 1988, how much money you can actually put into an insurance product and be able to take it out tax-free in the future. So for anybody to say that the infinite banking concept is some type of scam or some type of tax avoidance or tax scheme is simply not true. If the government's known about this for over 100 years and they've made laws that specifically say what you can do and specifically what you can't do, especially something that's written out in 1988 with specific sets of rules, then how can it be some type of a tax scheme? The answer is it can't. It can't possibly be a tax scheme that's anything illegal if the government actually created the rules and the guidelines that determines how long and how much money you can put into a policy before it would become a MEC or a modified endowment contract, which is basically just technical jargon, which it says, hey, if you put too much money into your policy too fast, you can create a taxable event. That's simply all that it means. Stay tuned for the next video in this series where we'll be answering, can I get started with no money down? And can I be in debt and start an infinite banking concept whole life insurance policy? In just a few seconds, the next video in this series will appear at the bottom left-hand corner of the screen. At the top left-hand corner of the screen will be the full webinar, which will answer 99% of all of the questions you have. Of course, don't forget to like, subscribe, and ring the bell so you'll be notified when I upload new videos each week. If you're watching this on a mobile device and directly on YouTube, there's a little arrow on the right-hand side. That'll open up the description below where you'll have a link to our webinar, our learning center, as well as have the ability to book a consultation with me directly to see if the infinite banking concept and becoming your own banker is right for you.